Hello and welcome. You're watching the Market Cafe with me, Ankita Saxena, and with me, Kanishka Sarkar. In the next 1 hour, we'll take you through how the global markets move and what are the cues that you need to watch out for before the start of these three. But first up, Kanishka, take us through how Wall Street has been doing. It was a rather mixed Wednesday that came in for Wall Street.
Absolutely, Ankita. Very good morning to you, first of all. It was a mixed session on Wall Street overnight. The S&P 500 that notched its second straight record close, boosted by a historic rally in Oracle, while the Nasdaq that finished near the flat line, whereas the Dow Jones Industrial Average that slipped over 200 points in overnight trading. In fact, Oracle, I said, was the star of the day, with shares surging 36%. It was its best session since 1992. This was after a strong cloud growth outlook that the company gave, adding $244 billion in market cap. Now, this rally spilled over to other AI-linked names as well, including the likes of Broadcom, AMD and Micron, offering a bright spot on an otherwise subdued trading day. Now, looking ahead, all eyes are on Thursday's CPI data. Now, Economists are expecting a headline inflation at the 2.9% level annually, with core CPI steady at that 3.1% level. Now, the cooler than expected PPI that came in on Wednesday, that has fueled hopes for a dovish Fed stance unless CPI surprises on the upside. Now, traders will also track jobless claims that are due to come later this week. Now, federal budget data, that's also something that will be tracked. And apart from that, some corporate earnings from Kroger before the bell and Adobe are in after us. So these are some of the cues that we are watching as far as U.S. markets are concerned. But how are things looking on the crude front?
Well, yes, the oil prices are on a rise. In fact, for the third consecutive session, we see oil prices that's up more than 1% on Wednesday in response to an Israel attack on Qatar, Poland's downing of drones in its airspace, and a push by the U.S. for new sanctions on buyers of Russian oils, although concerns about the excess crude supply capped gains. Now, Brent crude futures gained $1 or 1.6% to close in at $67.49 a barrel, and the WTI futures rose $1 or 1.6% to close in at $63.67 a barrel. And the prices had settled 0.6% higher in the previous trading session after Israel said it had attacked the leadership of the Palestinian militant group Hamas in Doha. Now, both benchmarks rose nearly 2% shortly after the attack, but then retraced much of their gains. But nonetheless, crude prices do see some gains coming in on the back of the rising geopolitical tensions.
All right, so that's about the commodity markets and how U.S. markets fared overnight. But let's get tracking some other global stories as well. Now, Poland has become the first NATO member to fire shots during Russia's war in Ukraine, downing suspected Russian drones that crossed into its airspace. The overnight operation involved Polish F-16s, Dutch F-35s, and also Italian surveillance aircraft. Now, one drone crashed into a pensioner's home in eastern Poland, destroying the roof but causing no injuries there. Prime Minister Donald Tusk has called it, and I quote, the closest we've been to open conflict since World War II. End quote. This is while he's also stressed that he does not see war as imminent. In fact, Moscow that has denied responsibility, blaming the incursion on Ukrainian territory. U.S. President Donald Trump, he spoke with Polish President, reaffirming NATO unity in the face of the incident. In fact, the European Union that has pledged commitment towards Ukraine, saying that Europe stands in full solidarity with Poland. Putin's message is clear and our response must be clear too. Let's listen into their comments.
Seen a reckless and unprecedented violation of Poland and Europe's airspace by more than 10 Russian Shahid drones. Europe stands in full solidarity with Poland.
And the European Union has pledged commitment towards Ukraine, saying Europe stands in full solidarity with Poland. Putin's message is clear and our response must be clear too. Let's go across and listen to the word coming in there. Wholesale prices unexpectedly slipped in the month of August, strengthening the case for a Federal Reserve rate cut next week. The producer price index fell 0.1% against the expectation of a 0.3% gain after July's increase was revised down. Now, the core PPI also dropped, pointing to easing inflation pressures, particularly in service, a key Fed metric. The markets reacted quickly. Stock futures rose while Treasury yields dipped. Now, with inflation cooling and futures already pricing in a 100% chance of a cut, attention now turns to the consumer price report to see if the Fed opts for a quarter or a potentially half-point reduction. Now, in response, Donald Trump amped up his attack against Powell, saying he must lower the rate big right now. And well, here's what Manish Singh had to say about why the Fed may even be forced into a 50 basis points rate cut come next week.
Again, tariffs is just one-time increase in price. And I know President Trump has been changing his mind frequently about rates, but a lot of the punitive tariff has gone away. And there seems to be an agreement that the tariff should apply at 20%. Well, not in case of India, but at least for majority of the nation. So if you take those things into account, then as I've said in the past, I don't see where inflation is going to come from. And the data is just showing us that it is going to be disinflationary, and therefore the Fed now is on a very sticky wicket, having said that they're not going to cut rates. I believe they will be forced to cut rates by 50 basis points next week when they meet on 17th of September.
All right, so that's about US PPI data. But moving on to some more global stories. Now, the US Senate Banking Committee has advanced Trump's nominee, Stephen Moran, to serve as the Federal Reserve Governor, setting up a full Senate vote. The 13-11 party line decision comes just one day after the federal judge temporarily blocked Trump from removing Fed Governor Lisa Cook, who is suing to keep her seat. Now, Moran, who's the chair of the Council of Economic Advisors, was tapped to replace Adriana Kugler, who resigned last month. Next up, a suspect is in the custody in the fatal shooting of conservative activist Charlie Kirk. FBI Director Kash Patel has confirmed the arrest just hours after Kirk was gunned down while speaking at a university. The shot was fired from a building 200 yards away, striking the 31-year-old in the neck. Utah Governor Spencer Cox called it a political assassination and vowed accountability, even pointing to Utah's death penalty. Tributes have poured in from across political spectrum, including Presidents Trump, Biden and Obama.
And Elon Musk briefly lost his crown as the world's richest person to Oracle co-founder Larry Ellison last evening. A surge of more than 40% in Oracle stock, fueled by booming demand for its cloud and AI data centers, lifted Ellison's net worth to $393 billion, edging past Musk's $385 billion, according to Bloomberg. Now, but as shares cooled later in the day, Musk reclaimed the top spot. The Tesla chief has seen his fortune pressed this year by a slide in EV sales and political headwinds. And shifting focus to India's neighborhood, Nepal's former Chief Justice Sushila Karki has become the preferred candidate of the Gen Z protesters to lead the interim government following the large-scale protests and political unrest. More than 5,000 young people joined a virtual meeting to choose the country's next leader. Remember, the death toll from September 8th protest has climbed to 30 now.
All right, those are some of the top global stories that we are tracking this morning. But on that note, we'll take a very short break. Be right back with it then. Now, China has hit a financial tipping point. For the first time, cross-border investment flows have surpassed the value of its trade in goods and services. In the first 7 months of the year, $4.5 trillion in money moved in and out of China. That's driven by a record stock rally, heavy trading of short-term bank debt, and also foreign demand for government bonds. Now, the shift signals Beijing's gradual but determined opening of its capital markets, a step towards elevating the yuan's global role. But authorities remain cautious, wary of bubbles and destabilizing the outflows. Now, moving on, Ankita, how are Asian markets reacting to these developments?
Yeah, absolutely. In fact, the Asian markets are following suit from Wall Street. In fact, they are penciling in the rate cut that we have been talking about. And on the back of that, though as of now, we do see some bit of a mixed signals coming in. Remember, from China, we do have the inflation data that's come out from China. The consumer prices in China fell 4 0.6% on a year-on-year basis in the month of August. That has missed the street expectations because we were expecting a 0.2% cut coming in, a drop coming in by that's the poll that Reuters had conducted, and basically the inflation has been more than what Reuters was expecting, and on the back of that we do see the Chinese markets that are trending in the red right now. In fact, Hang Seng is trading with cuts of 1% right now. Shanghai is also in the red, trading with cuts of 0.2%. We also have a couple of other names. Like I said, it's a mixed bag as of now. S&P ASX 200, that is in the red, trading with cuts of 0.3%. But it's the Japanese market, Nikkei, that is trading up more than 0.5% right now, 0.6% gain coming in on Nikkei. And Kospi is also trading with gains of 0.6%. So it's a mixed bag coming in, even though, of course, on the China front, we do see inflation that has, come below what the street was penciling in. And on the back of that, we do see the downtick coming in the Chinese market. So it's a mixed bag right now. As far as Nifty is concerned, we are headed for an absolutely muted start, albeit in the green, but a muted start of just 14 points uptick nonetheless.
Right, so positive start is what we are expecting, muted but positive for the Indian markets. But let's take a quick look at how markets fared yesterday. Now, the Wall Street did post healthy gains, advancing for the 6th consecutive session. But Nifty's resistance continued around that 25,000 mark. Broader markets outperformed for the 4th consecutive session. IT stocks also registered a strong run for the 2nd straight day. Now, let's go across to Snehi to get us all the details from the market action yesterday.
Well, it's all in all a good trading day is what we saw. 25,000 is something that we scaled to that mark, but we were not able to hold on to that. And we shut shop around the 24,973 mark. Nonetheless, a 0.4% or 100-point uptick coming in for the Nifty, 0.4% uptick coming in for the sensex as well. Nifty Bank fizzled off slightly from the day's high, but continued its outperformance over the benchmarks, and 0.6% uptick over there. A 320-point uptick coming in on Nifty Bank, closing around that 54,500 mark as well. If you take a look at the broader end of the market, the mid-cap space outperformed the overall breadth of the market. Good moves coming in on Nifty mid-cap, almost a % move coming in over there. Nifty small-cap was also not too far behind. From the top Nifty 50 companies, you have BEL, Wipro, HCL Tech, HDFC Life, Bajaj Finance, TCS, Infosys. That were some of the top gainers. On the flip side, some pressure coming on Nifty from the auto pack, which is the top losing sector, with names like M&M, Maruti Suzuki, Bajaj Auto, Hero Moto, Tata Motors, Eicher. So basically, your top 5 or 6 losers from the Nifty 50 all belong to the auto pack, followed by Ultratech Cement as well as Trent. Sectorally, you had IT that continued its dominance for a 2nd straight day. Nifty IT was up another 2.6% with names like OFSS, because their global parent did well in quarterly earnings. That's Oracle. So Oracle Financial, that's OFSS, did very well, up about 10%, followed by Persistent, Coforge, Emphasis, and the larger caps as well. So overall, the mid caps in the IT space were leading all the gains. Followed by that, you had PSU banks that did very well, with Bank of India, Union, Indian Bank, Maharashtra Bank, all doing very well for themselves. Realty, Energy, FMCG, banks and pharma, and Nifty Metal too to some extent have ended in the green. On the flip side, pressure coming in only on Nifty Auto. Some sectors that were abuzz on the back of renegotiations between India and US, at least that is what the leaders of both the countries have hinted at. So textiles was a sector that was buzzing. You had Vardhaman Textiles, Gokuldas, Trident that did well. Lots of stocks that have done well from this entire space. So a focus on textiles as well as shrimp stocks on the back of that EU news flow coming in, as well as renegotiation between the two countries. A big export sector this is that shrimp. So Avanti Feed also did very well for itself. So that was the roundup on how the market has performed. All eyes are going to be on when we scale that 25,000 mark on the Nifty and hold past that.
All right, it's a wait and watch out for the 25,000 mark, and holding on to it is what we will be watching out for. But a couple of stocks that we need to watch out for in today's trading session. Then Ashesha is joining us with all the stocks you need to keep on your radar. Ashesha, take us through that.
Well, yes, let's start with the defense sector, and Mazda Dock in particular will be in focus today. This because company has given an important clarification to the exchanges. Remember, this has been the buzz for the stock for the last several months. And the company now says that negotiations with the Indian Navy with respect to submarine project P-75 have now begun. Remember, last time the company has said that no clarification or no communication has been done with Indian Navy, and hence this is an important clarification to the exchanges. The stock can focus on the back of that. Jupiter Wagon on the back of some new order wins that have come through. In fact, the company says that
they've won orders worth about 113 crores. This is for bogies from Ministry of Railways, so keep an eye out on this counter as well. Meanwhile, Economic Times has reported, citing sources, that tweak in rules could actually stall 72,000 crore of investments in solar, and on the back of that, the entire ecosystem will be in focus today. The stocks, the likes of Vari, Vikram Solar, Premium Energies will all be in focus on the back of this negative news flow coming in for these stocks. Meanwhile, Shyam Metallics, on the back of some expansion plans, where the company says that they are looking to enter into crash barrier manufacturing. This will be to support road and rail safety. And the company also says that they are eyeing market share of about 8 to 10% in FY26. So some expansion plans coming their way, and Shyam Metallics in focus on the back of this.
All right, thanks Ashesha for taking us through that list. But Sharad, let me come to you as well. Which are the stocks that you are tracking today?
From the mid-cap space, Tega Industries is in focus, and a very large acquisition has been reported by the company, and this acquisition is almost $1.5 billion. The company will be acquiring Molycorp, which is the world's largest grinding media supplier, and they'll be acquiring with Apollo Funds. The company will have 77% stake, while Apollo Funds will have almost 23%. The deal itself, the valuation coming at only 8.6 times its FY26 EBITDA levels, which is at a very steep discount when compared to what Tega Industries is trading at. The funding, of course, would be coming in via debt and almost a 2,200 crore equity raise, and this could be via QIP preferential, and also promoter participation would be there. So interesting development for Tega Industries. Also, Dr. Reddy's Labs, slight positive news flow expected, as the company will be acquiring Stugaron for almost $50.5 million, and this will give access to 18 markets in Asia Pacific and Europe, Middle East and African markets, and this will also strengthen the central nervous system portfolio for Dr. Reddy's. The shipping corporation, the company will be taking a physical delivery of a second-hand, very large gas carriers. It augurs well for the stock, while RVNL also received a Western Railway project and was the L1 bidder for roughly 170 crores worth of order. We might see the railway stocks buzzing in trade as well. And also from the pharma space, another important news flow coming in is Biocon has inaugurated its first manufacturing facility in US, and it is an oral solid dosage facility.
Well, moving on then, we spoke to Alex Muscatelli, Director of Economics of Fitch Rating, on the credit rating firm's outlook for the Indian economy. Let's listen in to an excerpt of a conversation we had with him earlier.
Yes, so we published our new global economic outlook just yesterday evening, UK time, and there we revised up India's GDP forecast for the current financial year to 6.9% from 6.5 previously. Now, the key driver of this upward revision was the very strong outturn that we saw in the first quarter of the financial year, with GDP growth accelerating from 7.4 to 7.8%. And also, just looking at the components of growth, the composition of growth gives us a bit more confidence that it will be sustained in the near term. Including also the outturns from other indicators, for example, business surveys looking into the summer. So that was really the main driver of our upward revision. So now we are expecting 6.9% for 25-26. But we do still see a slight slowdown in growth for the following two financial years, to 6.3 and 6.2% respectively, as the Indian economy slows down, considering that it is currently operating above trend, and there will be some and so there is some limit to the speed at which it can grow over the years ahead.
All right, so that's the word coming from Fitch on the Indian economy. But moving on, let's also take stock of some of the cues that we need to watch out for today ahead of the trading session and later in the day. Snehi is now joining us with just that list.
Well, yes, lots of cues to watch out for, and well, Thursday, so it's going to be the weekly sensex expiry. All eyes are going to be on that. Globally from US, CPI numbers are going to be very closely watched out for. Initial jobless claims, federal budget balance are also going to be some important macroeconomic indicators to watch out for. From Eurozone, all eyes are going to be on the ECB rate decision, post which you will also have the ECB President Christine Lagarde, who will be holding a press conference. So important commentary could be her. We could see some rate momentum coming in. So very important event to watch out for. And from Japan, the macroeconomic indicator to be watched out for is going to be the PPI. Now, in terms of global earnings, all eyes are going to be on Adobe. But if you shift focus back home, lots of stocks are going to be in focus on the back of corporate action and board meetings. Let's talk about Infosys. The stock is going to be in focus because the board of Infosys is going to be mulling their share buyback. Remember, the stock has been abuzz ever since the announcement, so that outcome on that front is going to be out, and that's going to be an important announcement to track. Patanjali Foods will be trading X bonus in the ratio 2:1, so watch out for that as well. Blue Jet Healthcare OFS, their offer for sales will be opening for retail investors, so watch out for that. A lot of stocks will be trading ex-dividend, the likes of Century Plyboards, Capri Global, Gulshan Polyols, Ircon International, Somani Ceramics, as well as Subros, and it's going to be the last day to buy a lot of stocks if you wish to be eligible for their interim dividend record date. And these stocks are Mrs. Vectors, Kaplan Point, Cochin Shipyard, Garden Reach Shipbuilders, Kajaria Ceramics, KPI Green, Mastec, RHI Magnesita, Talbros, as well as a whole host of other stocks. In terms of annual general meetings or AGMs, watch out for CESC, IEX, Clean Science and Tech, Keynes Techs, as well as Jyoti Labs. Lock-in period will be opening for the recently listed JSW Cement. A 3% equity lock-in or 3% equity will be coming out of lock-in for this stock. So watch out for any volatility here. And in terms of other events, you'll also have OPEC that's going to be releasing its monthly oil market report. So very important cues to watch out for, important triggers. So watch out for all of these cues very closely.
All right, do watch out for these cues. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we come back and give you more updates on the market. Stay tuned.
Of HMT Limited, the public sector undertaking, and in the same direction, the Union Minister of Heavy Industries, H.D. Kumaraswamy, held a high-level meeting with the Minister of Railways, Ashwini Vaishnav. Both the ministers discussed the current potential of HMT Limited and exploring the new avenues that can help to revive the financially stressed public sector undertaking. But we are also getting to know that both ministers also discussed that what could be the new avenues and also how railways can contribute by giving new order books to HMT Limited, and that if railways support or give any new order book to HMT Limited, that will definitely boost the overall operational performance of the PSU and also provide financial stability as well. The ministers have directed the officials to come up with a concrete roadmap, to come up with a concrete plan that how the overall performance can be further improved, and also to utilize the HMT's potential, whatever the strength that HMT has got, how it can be utilized in a better way. If we see the larger picture, HMT, the 3 units which it has got, it includes one Ajmer, Pinjore, as well as Kala Maseri. So of the 3 units, Kala Maseri has shown operational profit in last couple of quarters, and this unit can actually contribute for the defense and the railway sector. That is what the government is eyeing for. And from this particular unit, the government understands that from here it can get a significant order from railways, from the Indian Railways. So seeking that in mind, both the ministers chaired a high-level meeting. We have also seen that in the recent past, a technical committee has already been formed by the government under the member of Nifty Aayog that will come up with a detailed roadmap that how the assets, how the land which is there with HMT, it can be monetized and used for not just improving HMT, but it can further give a push to Make in India initiative, and how HMT can further contribute not just for Indian Railways, but also for the defense sector.
All right, moving on then. Tamil Nadu's Minister for Industries, TRB Raja, shares the state's auto ambitions with etnow as Hinduja Group signs investment deal worth 7,500 crores with plans to set EV charging hubs and more. Let's listen in.
As far as the investments are concerned, especially on the Hindujas front, we're very thankful to the group. They've come ahead and invested they promised to invest about 7,500 crores and have expressed our interest to increase that investment in Tamil Nadu. I've asked them to increase it also in the future, and they've said yes, there are possibilities. They are looking at the EV infrastructure. You know that Tamil Nadu is the EV capital of India. Right. For almost 40-45% of all the four-wheelers manufactured in India, sold in India, are manufactured in Tamil Nadu. 70% of the two-wheelers sold in India, manufactured in Tamil Nadu again. So the ecosystem is extremely ripe, and hence the Hindujas are more than willing to come and set shop in Tamil Nadu. I'm very thankful to them. That said, the BESS is something which we are also very, very interested in. They've also stepped into that.
Keeping with automobiles itself, another very interesting announcement was the BMW team that met the Chief Minister on these trips. Are there expansion plans in the offing?
They've been partners for a long time, and there's been a lot of expansions in this time around also. We've been very carefully going after existing players also, because we know that this is a marriage between the state and industry, right? You don't want to take your partner for granted, right? You need to give them the attention that they need, and you make sure that they're happy, right? Just like in any marriage. So that's how I approach this one.
All right, so that's the latest word coming from Tamil Nadu's Industry Minister. But moving on, let's focus on the mutual fund space. Now, mutual fund inflows for the month of August more than halved, coming down to around 52,400 crore versus 1.70 lakh crore last month. The monthly SIP figures are at a near record level and also stay above that 28,000 mark for the second straight month. In fact, large cap funds inflows, they were up 33% month on month, whereas flexi cap funds inflows, they also remain strong for the second straight month. Sharad Dubey is here to take us through all the details. Sharad, over to you.
The August AMFI data has been strong when it comes to retail participation, as the SIP levels are still near the record levels, and for the second straight month going past the 28,000 crore mark. But there are some mixed trends which we are getting to know. Except dividend yield, most of the equity fund schemes saw positive inflows coming in. And the large cap funds itself, we saw the inflows jumping as high as 33% on a month-on-month basis. The negative surprises coming in is for the small cap funds, where the inflows are down 23% on a month-on-month basis, as we saw a lot of volatility in the market and flight to safety for mid caps and large caps. Sectoral funds, over here there was almost a 60% downtake of a month-on-month, coming down to less than 3,900 crores of inflows, while flexi cap was the important choice for the fund managers, as we saw for the second straight month, 7,000 crore plus is coming in this category. Equity inflows, they have fallen after record high numbers we've seen in last month itself, where it went past the 42,000 crore mark, but still it is stable at 34,000 odd crore rupees. Also interestingly, the overall flows, if you look at it, that has actually come down, and this is because of the outflows coming in the liquid fund segment as well. Net, the equity AUM and the total AUM still near the record high levels, but the NFOs, the last quarter, the numbers were very huge. Roughly, you could say 30,000 odd crores were there via NFOs, but this time only 2,900 crores worth of NFOs and inflows were recorded. So NFOs, small cap and thematic segment did a month-on-month a big decrease in their flows, but overall the SIP and the resilience of the retail investor still remains intact, with more than 28,000 crore of monthly flows coming for the month of August.
All right, we are still sitting at those record highs as far as the SIP numbers are concerned, and the mutual fund data that Sharad just came out with. But let's move on and take a look at the IT pack in terms of technicals. What's in store for the IT lot? Let's go across to my colleague Kunal, who's joining us to break it down for us.
Why the Nifty IT index is going through a potential a turnaround both on the short term as well as in the long term charts. Now, this is a very short term trend for the Nifty IT index, how the index was beaten down significantly from the July highs of 29,500. We fell down as much as 5,500 points on the Nifty IT index. More importantly, after spending time almost a couple of months over here in this tight range, we are looking at a potential breakout which could happen for the IT index, and this could potentially be a good breakout for the IT index, because this is almost like a 2,000 to 2,500 point consolidation for the IT index. this could be very, very interesting for the near-term prospects. Now comes the chart perspective from the long-term play. Now, there has to be a point where the Nifty IT index gets into an oversold territory and it sees periodic bounces. We've looked at the charts over the last many years, and apparently this 40-day exponential moving average on the monthly charts, I think is a very strong support territory for the IT index. And if you've seen multiple times when the IT index has gone through a correction, the retracement happens at this 40 monthly moving average, and then from there starts the process of rebuilding, as well as a point where the risk reward becomes extremely in favor for the IT index. A more recent one was in 2022-23, where the IT index fell from 40,000 to sub 30,000 levels. The correction halted at this key moving average, and then started the building blocks of a fresh rally which started off, lasted for at least another 2 to 3 years. We are almost at the same point of the Nifty IT index in terms of the charts. So this could be something which is very, very critical, and this indicates that this could be a good value buy territory even from a long-term perspective. Just to end with one perspective, Infosys, I think that's been the trigger point for the entire rally on the IT index. The last time when Infosys announced a buyback was in 2022. I think 13th of October, if I'm not wrong, was the date when the buyback was announced. The stock was almost at 1420 levels. It started off with a gap up opening, 5% uptick. But then what followed over the next 1 month was almost like a 240-point rally for Infosys. So it may not be a short-lived move. We are seeing a very similar kind of a move for Infosys this time around after that 5% up move which the stock has seen yesterday. So to sum it up, I believe that the IT index is in for a good revival, both on the short term as well as on the long term charts.
All right, thank you, Kunal, for taking us through all those technicals for the IT sector as well as Infosys in particular. But moving on, let's also take a look at what's the bull versus bear case looking like for the Indian IT sector. Sharad and Varun are here to take us through that. Over to you.
Okay, so I would be the bull for IT sector and Sharad is going to be the bear, and let me put forward my first argument, that's the bull case. And see, for an Indian IT company, the most important thing is the US market. And if you look in the US market, the most important thing now is the interest rate cut. And after the recent economic data, people are expecting an interest rate cut in the September policy and also going ahead. So definitely this will actually increase the overall discretionary spending, and that will impact the overall Indian IT sector. So that's my first point, and that is the US market and the rate cuts.
Well, yes, Varun, that's a good point you have raised, but do remember Indian IT companies and the global companies, there's a difference. The global companies are product based. That's why they command a valuation premium in the markets, and no such premium is coming in for the Indian IT space. If you look at it, they are largely service based. So this is, of course, you could say this entire year there has been an underperformance also in the IT stocks. It's just been 2 days of growth coming in the IT space.
But if you look at the management confidence, it comes from the Infosys buyback. On the 11th of September, Infosys has a board meeting. They are going to decide on the buyback, and it's after a long time that our IT company is coming with a buyback that eventually gives confidence among the investors that yes, there is a lot of strength still remaining in the overall IT space.
Well, yes, for shareholders it is good, but for the industry, not major investments coming in when it comes to R&D and AI, and that also gives a question in the industry. Also, there's a lack of names coming in when it comes to the AI or even the semiconductor race. We do not have actually a proper semiconductor setup, and neither we are having a full-fledged AI company. We are having some integrations, smaller ones.
But if you look at the overall commentary of several global giants and also the new clients, they are actually promising. Look at the commentary of Oracle Finance. After the commentary, the stock has shown a good jump. Also look at the commentary of United Health, which is one of the biggest client of Persistent System. Also, brokerage houses have upgraded the stock. So if you look at the global scenario, it is actually improving.
Well, yes, the mid-cap space is actually improving, Varun. That's a great point. But the divergence is very big. First, we look at the Nasdaq. This year itself, Nasdaq is up 13%. And the Nifty IT index, I'm looking for gains, and there aren't such gains. It's 14% down.
That actually shows you that the valuations are cheap, especially if you look at the major IT companies, Indian IT companies, the overall valuation after the recent fall have actually become lucrative, and this is the right time to buy the Indian IT companies.
Well, of course, the valuations have turned cheap, but the earnings have not been that strong, especially the hiring trends. That has been confusion for the last 2 odd quarters, and a lot of companies haven't even given the guidance yet.
The hiring trends are not strong. Also, the results were not that good, but yes, the companies are now diversifying. If you look at some of the good companies like TCS, they have recently got an order of around 550 million euros from the
European countries. So yes, US might be a problem that has created problem in the overall earnings, but they are diversifying, and that would be a big tailwind for this company.
Well, yes, but US is creating one more problem, Varun, and that is the Hire Act. Of course, it's put out in the Senate. And interestingly, the question mark comes is on outsourcing. They are focusing much more on local labor. Right. And India is an outsourcing theme also in the export space. So that's a point which I was to ponder upon.
But actually, that's a positive point for Indian companies, because if you look, the rupee is actually depreciating and Indian companies are actually exporting. So definitely they earn in dollars, and definitely this will impact the overall earnings of these companies, and it is expected that the margins from here are expected to rise also.
Well, yes, margins, there is a very good, strong tailwind coming in. But the revenue is something which I am concerned, because AI billings might be there, and that might concern the IT companies. The work which was done by, say, 10 people in a group can be done at 4 people now. So that might be an error as well. Okay. So there's a lot of confusion here. Short-term basis, of course, Varun is winning with his bull case scenarios. But long-term, should we be cautious for IT? That's a question which we are looking out for.
All right, so that's a comprehensive breakup of how IT is going to fare, a bull versus bear case scenario. But definitely on the technicals, it looks like IT is in for a reversal, like Kunal mentioned. But it's a wait and watch. Let's get on with the news flow that is coming in now. Starting today, Indigo will resume 4-day daily scheduled flights to and fro Kathmandu. In addition, subjected to regulatory approvals, 2 special relief flights will operate in the same day, dedicated to bringing the passengers home safely. To facilitate ease of travel, these relief flights will be offered at special fares. It is to be noted that Kathmandu Airport suspended operations the day before following violent Gen Z-led protests. Prime Minister Narendra Modi will host the Mauritius counterpart in Varanasi today. During their bilateral discussions, the focus will be on development partnership and capacity building. Later, PM Modi will undertake an aerial survey of the flood-affected areas in Uttarakhand.
The Indian Navy's latest indigenous guided missile destroyer, INS Surat, has successfully completed a passage exercise with the Italian Navy destroyer. According to the Indian Navy, the exercise included a range of joint drills, from tactical maneuvers and aircraft tracking to communication drills and cross-check landing. Alright, so those are some of the top stories that we're tracking at this hour. But with that, we're completely timed out in this edition of Market Cafe. Ankita and I will take your leave, but don't go anywhere, as the market will take all the action forward.
Have been very bearish on IT for a while, and now it has potential to outperform next 6 to 8 months perspective.
Primary focus area is any and every service that can be delivered within the 4 walls of your home. But in the future, we expand into other segments of home services as well.
Factory capacity 2.5 ton approximately.